What's up, you guys? So I've been getting a lot of requests recently asking about my opinion on the stock of two of the largest solar panel manufacturing companies in the world, Canadian Solar and Jinko Solar. So that's what we're going to do. On this episode, I'm going to answer that question and give my thoughts on these solar panel manufacturing companies' prospects, and even touch on First Solar a bit. Spoiler alert, I'm in no rush to buy in just yet, but the opportunity I've been waiting for may just be right around the corner. Hi, I'm Gio, and welcome to Renewable Energy Investments. This channel offers a high-level discussion of publicly traded renewable energy companies, because building an investment portfolio starts with building awareness. Okay, so let's jump right into the charts, and I think it will become clear why I'm in no rush to get into these stocks right now. First, take a look at Canadian Solar. The stock has been trading pretty much sideways since 2009, with some peaks just above the $40 and dips into the $5 range. Now, let's take a look into Jinko Solar. It's pretty much the same story. Peaks near $40 and dips under $5. What about First Solar? This one's a little different, as it never really rebounded anywhere near its all-time highs. But when we look at the past 5 years, it's pretty much the same story again. Each chart pretty much looks like a roller coaster. Straight kangaroo market style, they jump up and down, but over the long run, they pretty much just go sideways. For all you long-time shareholders, I feel your pain, especially considering the record bull market during this time and the fact that these stocks have not even kept up with inflation. To make matters worse, these companies don't even pay dividends. These solar panel stocks have objectively been pretty bad over the past decade, even while being somewhat propped up by the support of government incentives. So why have they been struggling? Well, it pretty much all comes down to this. Solar manufacturers have been beating each other up over the past decade, and much to the detriment of investors. There's been too much supply and too much competition, resulting in constant downward pressure on the average selling prices of solar panels. And there's not really much these companies have been able to do about it, because customers largely consider solar panels commodity-like, and will buy whichever panels produce the most energy at the cheapest price. The problem is, most panels produce roughly equivalent energy, so the manufacturers are forced to compete primarily on price. The result is lackluster profits and lackluster stock prices. But there may be reason for optimism going forward. First of all, solar energy is at an inflection point. It is becoming one of the most, if not the most, cost-competitive sources of energy in the world. Here's a short clip from our video called "Are Renewable Energy Stocks a Buy?" to get the point across. These declining costs are especially interesting when considering that the levelized cost of electricity for solar is already competitive with all fossil fuel generating sources. Unfortunately for the fossil fuel industry, this will not last very long, as within the next 5 to 10 years, solar will be more cost effective than fossil fuels. Solar panels. According to the International Renewable Energy Agency, or IRENA, global solar capacity is expected to grow sixfold from the 2018 levels of 480 gigawatts to 2,840 gigawatts in 2030, and almost 18-fold to 8,519 gigawatts in 2050, with a compounded annual growth rate of nearly 9% during this time. Meanwhile, annual global solar additions are expected to grow almost threefold from 94 gigawatts in 2018 to 270 gigawatts in 2030, and almost fourfold to 372 gigawatts in 2050. As you can see, we are just now entering a point in time where solar is becoming the cheapest source of energy. This bodes well for solar panels in general, as a wave of new demand is coming that may even help relieve the downward pricing pressure. Second, demand for solar installations is expected to drop 20 to 25% in 2020. Wait, what? I thought demand was supposed to increase, and I thought this is a list of reasons to be optimistic. Hear me out. Due to that certain 2020 global health issue, solar manufacturing companies expect demand for solar panels to fall off a cliff in 2020, followed by a rebound in 2021 and beyond. Meanwhile, these same companies are increasing their production capacity right now. Does this remind you of anything that happened recently? With an increase in supply and a massive decrease in demand, the short-term prospects for the solar panel business are looking pretty bleak. Average selling prices are expected to drop dramatically in Q2 of 2020, then again in Q3, and only begin to recover in Q4 or sometime in 2021. This is where it starts to get interesting. On their Q1 earnings releases, both Canadian Solar and Jinko Solar stated that they expect 2020 demand weakness will drive smaller, weaker, and/or producers with outdated production capacity out of the market. These less capable companies will simply be unable to compete. As a result, there will be a consolidation in the solar panel market, and the biggest, best companies will grab even more market share in an industry which is projected to have accelerating growth going forward. Thus, the bullish thesis starts to come into light. All of this could end up being the perfect storm to help position companies like Jinko Solar and Canadian Solar to finally break out of the kangaroo market after their next drop. Quick reminder to smash that thumbs up button. It helps this new channel out with the algorithms and makes all the research work that I put into these videos feel a lot more rewarding. Also, I invite you to subscribe to this channel to follow along with our discussion of wonderful renewable energy companies. Okay, so let's take a look at a couple more reasons why solar panel stocks may break out over the next year or two. Then I'll give a peek into my thoughts and opinions on whether I might buy into these stocks. Remember those solar panel addition projections we talked about earlier? Personally, I think those numbers are too conservative and will end up being significantly higher. This is mostly because of faster than expected improvements and complementary technologies that bode extremely well for solar panels. For instance, because Tesla has helped the entire world realize just how valuable lithium-ion batteries are, we're all of a sudden seeing massive amounts of research and development with respect to battery technologies from a plethora of big players, even more so than previously expected. The race for highly efficient, long-lasting batteries, and even the rumored solid-state battery, is on. Each improvement in battery technology makes solar energy more and more compelling. It will accelerate solar farm and battery storage projects, each of which requires massive amounts of solar panels, perfect for bulk purchases from Jinko Solar and Canadian Solar. Meanwhile, we have the impending emergence of virtual power plants that companies like SolarEdge and Tesla are aggressively pursuing. If you haven't seen our video entitled Tesla Virtual Power Plant and Auto Bidder Software, 5 Reasons Why I'm Pumped, it may be worth a quick watch. In short, such technology will significantly increase the value of, and thus demand for, solar energy systems. Another reason why solar panel stocks may break out is valuations. Because these solar panel stocks have been beaten down over the past decade, they currently trade at very reasonable price-to-earnings ratios. If these companies' prospects start to turn around, then their stock price has ample room to run. My opinion. At this point, I'm more focused on if and when I think the solar panel industry as a whole will start performing well. I'm less focused on which particular company I would choose. But let me know in the comments below if you'd enjoy a video comparing the products and businesses of Jinko Solar against Canadian Solar and maybe even First Solar, and then I could pick which one I think is the best. Despite my extremely bullish view on solar power and reasonable valuations, there is one main reason why I have a really hard time risking a lot of capital stock picking solar panel stocks. I have a very difficult time finding any single solar panel company with a strong moat. As a long-term investor, I look for companies that I am extremely confident will be worth more in 5 to 10 years than they are worth today, and a big part of this is knowing what about these companies gives them staying power and the ability to fight off the competition. There's so much innovation and emerging technologies in the solar panel space that I just don't feel confident enough that some other company won't introduce a breakthrough solar panel that is either much more efficient or cheaper or both. And for that reason, taking a large position in any of these companies would go against my core investing strategy. On the other hand, until a better solar panel technology emerges, if it indeed ever does, the sheer volume of solar panels that these large solar panel manufacturing companies produce puts them in a great position to benefit from economies of scale, making it very hard for smaller companies to compete. I'd love to hear your guys' opinion on what moats Jinko Solar, Canadian Solar, or First Solar have, or if you are confident that they will maintain their market position going forward. Now, I would not be surprised at all if all three of these companies end up being very successful during the next 5 to 10 year period, and I end up regretting not building a position in these leading solar companies at very reasonable price to earning valuations. In fact, I'm kind of expecting this, to be honest. But personally, I'd just rather go with another investment with a stronger moat. On the other hand, if one was fortunate enough to pick a stock that ended up developing one of the best solar panels for years to come, there could be very nice upside over the next decade. With that said, if weakness in the solar panel market drags these stock prices down to even better valuations, and margin squeezing looks like it will indeed result in consolidation within the industry, the risk-reward would make too much sense. At that point, I would be interested in picking up some shares. The handful of the surviving companies could be set up for big opportunities going forward. I'd love to hear your opinion in the comments below. Do you think these solar stocks can finally break out and start moving higher over the next few years? If you had to choose between Jinko Solar, Canadian Solar, and First Solar, which one would you go with? Or is there another company that you like even better? Thanks for making it to the end of the video. Have a great day. I'll see you on the next one. Oh, and as always, let me know if you have any ideas for future videos. Smash that thumbs up button and don't forget to subscribe.